Good morning and welcome to another edition of the OFX Currency Couch. I'm Matt Richardson, Senior Corporate Dealer. I'll be again running you through a recap of last week's events and giving you a summary of what we're watching in terms of directional markers for the week ahead. Last week saw relatively little macroeconomic data on the global docket, giving us directional impetus, and the focus then shifted to a symposium of central bankers in Jackson Hole. Key events coming out of that were commentary from the ECB President Mario Draghi, and as the Australian dollar is concerned, a lack of emphasis from the Fed Chair Janet Yellen on monetary policy guidance, helping the dollar push back through that 79-cent handle into the weekend. This week our focus is to a much more crowded docket with a raft of US macroeconomic data sets guiding direction. Key takes out of this week will be GDP numbers, inflation numbers and labour market data out of the US. Particular focus to those inflation numbers. We've seen a series of weak prints out of the US of late, and if we see another soft read, that could impact the outcome and expectations for a December rate hike from the Federal Reserve. Those have dropped below 40% now, and another soft print could see a further weakness in the short term for the US dollar. Of course, we have to throw into the mix the ongoing narrative of a possible US government shutdown on the back of this debt ceiling issue that's again raised its head. The last time that this was a concern was back in 2013, and the Trump administration seems set on stalling any increase to that debt ceiling under the guise of the Mexican wall issues at the moment. So we expect the Australian dollar will hold between its recent ranges after the rally throughout July between 78.80 and 79.60 for short term, with a wider range between 78.30 and 80 cents. For more information, you can of course contact our dealing teams both on our private and corporate desks. Thanks for watching.